Hey, what's going on, everybody? Welcome to another episode of Crypto World Radio. I'm your host, King Wabi, and here we are presenting to you another lovely episode sponsored by Because Bitcoin. And today's guest is Joe Carlicer, a good friend of the community. He is running a little bit late, guys, so we're just gonna give it like another 3-4 minutes until he shows up. He did message us in advance, letting us know that he'll be running about 10 minutes late, so he should be here shortly. And today we're just going to go over just his thoughts on Bitcoin's intrinsic value. With this format of spaces, I like introducing our guests formally and getting to know them on a more personal level, and kind of get their thoughts on how they came across the digital asset space and what they've learned along the way. Sort of like, what they thought at first versus, what they think now, and any advancements they think that have gone on in the space, and any developments that they're enjoying currently. We've had prior guests from the Bitcoin space, such as Magoo and Matt Coons, good friends of the show as well, and it'll kind of be that same format. I know with Market Talk, it's more of like price discussion and macroeconomic talks, but I think with episodes like these, getting to know our guests on a more personal level, it kind of brings a new perspective and overall adds value to the community. So hope you guys enjoy this episode. And just a quick question: is it is it Carter behind the Because Bitcoin page today, or is it Mr. Producer? Because Carter had told me that he wanted to make a small appearance here today. I think that should be fun. I see the thumbs down, the thumbs down. All right, guys, we have Joe in the building.
Good evening, everybody. Sorry I'm running late here.
Hey, what's going on, brother? Good to see you here, man. It's all right, man. I gave a brief introduction, so yeah, man, welcome to the show. I see we have Premise on. What's going on, brother? And just a reminder, everybody, if you enjoy content like this and you're subscribing to this content via YouTube, be sure to leave some feedback. And for anyone here listening on Twitter Spaces, if you want to catch a replay of the space, go ahead and check out our YouTube channel and turn on bell notifications so that you can see when this sort of stuff gets uploaded. And Joe, I want to welcome you on here, brother. I know me and you haven't been introduced formally. It's kind of been just on Brandon Spaces over the last, like, what is it, like we're coming across like a year, right?
Yeah,
Yeah,
about a year.
yeah. So I'm definitely gonna enjoy this time, bro. So I want to thank you for the time that you've taken out of your day to come on my show, man. So I guess we can get the show on the road, brother. My first question to you is pretty simple. How did you come across the digital asset space? Like, what brought you into Bitcoin? Like, what was it that sparked your initial interest about it?
Yeah, thank you. I'll just say I appreciate you having me on. And there's nothing I like talking about more than Bitcoin. If you follow me on Twitter, it's like something that has consumed both my personal and professional life. Being a lawyer in the digital asset space and advising clients, it's all encompassing. So to answer your question, I first became involved with Bitcoin in 2015, mostly because I had some clients that were dabbling in it and seeking legal advice. And at the time, there was only a handful of lawyers that had any clue what it was. I mean, back then, there was questions galore about taxation and custody, kind of similar to now. There's really been some development on the taxation issues and how do you treat it. Is it a security, the commodity, that sort of thing. But we still have a lot of vagaries in the law regarding digital assets generally, not so much with Bitcoin, but the broader space. But in any event, as I was advising clients, I think I approached Bitcoin naturally, as many do, very, very skeptical, very much, how could this magic internet money that some guy created out of nothing have any sort of value? And I am naturally somebody, as a litigator, as someone who likes to cross-examine and test every single thing, test every assumption. I started doing that with Bitcoin, and the more and more I pulled pulled it apart and put it back together and researched it and tried to learn some elemental aspects of understanding the code. I just thought it was pretty beautiful, pretty simple, elegant solution to a really big problem. And as someone who's been investing since basically really grade school with my dad in a custodial account, I have long known how absolutely flawed, deeply flawed, and broken our monetary system is. So naturally, given this advent of the internet and the advent of sort of the obsession of central banks to try to control and push against natural economic forces that are influencing how our markets are developing, I saw Bitcoin as a natural solution to the problem. A lot of people still think that's absurd or sort of a crazy statement, but I really believe it. We got a lot of options traders, I think, in a lot of Brandon's rooms. And the way I've always described Bitcoin is I think Bitcoin is a call option on a future monetary system. I think that ultimately Bitcoin presents a potentiality of usurping how we do money and how we do economic transactions and commerce. We're in the early days. It's still incredibly young as a protocol, and I think it has so much more to go before it can be ready for it to serve as the world's monetary system. But to me, I think all the pieces are there, and I think it has a better chance than virtually anything out there of being the backbone of the future monetary system. So anyway, that's my answer. We can pull that apart and talk about more nuance if you want.
Perfect, brother. Thank you for that introduction, man. It's good to hear from you, man. So I guess we can kind of dive deep into what the next few years have for the space. In 2015, when you came in, it was the advent of the retail user being able to access this asset class a bit more simple. We went from only having Mt. Gox and Bitfinex to more liquid platforms around that time period. You had Coinbase rolling out more user friendly interfaces. You had Gemini rolling out their marketing, and Kraken as well. You had all these exchanges pop up for the retail user, and then more recently, this prior run, there was more front ends for quote unquote institutional buyers. You saw guys like MicroStrategy and Tesla come in, and Kathy Wood, whatever you want to call them, right? But more from the TradFi side. So when you came in the space, was sentiment in the realm of institutional money is coming in, or was it more of this dark wasteland sort of cypherpunk rebellion against the monetary system? How was it like in those times? I think getting perspective from individuals that got into the space in that time can really help us gain some insight, because now it's like everybody knows what BTC is, right? But I think over the next few years, people are really gonna find out the intrinsic value of BTC, and for myself, it's essentially the scarcity asset and what it's backed by. And not to sound like Michael Saylor here, but every block that's produced, it's essentially backed by energy via miners and the proof of work system.
Yeah, great question. So, for as long as I remember, even earlier before I bought Bitcoin, uh, folks would always talk about this idea of institutional money and bigger pockets coming in, and Bitcoin has such a small relative to other global assets and developed assets, such a small quote unquote market cap, that they would say, oh well, Bitcoin can easily get to X amount of dollars if it captures 5% or 3% or 2%. And I originally was sort of persuaded by that logic, just as sort of a speculative thing, like as a trade, like, yeah, okay, even if this thing is worth nothing, if comic books have a huge market cap, all sorts of collectibles have this. Bitcoin can have that sort of collectible type market cap, and it can explode and easily go to $20, $30, $40,000. That I remember thinking that logically. What I would say is that my thinking on this has evolved somewhat, particularly over the last, say, 4 years, 4 or 5 years since 2018, really. Whereas I sort of realized middle of 2017 when I did more research on it, just how, as I alluded to, like how deeply flawed our economic system is, just from the standpoint of our inability to, quote unquote, at the time generate inflation, or our inability to stimulate, or the inability of central policymakers to push things forward. So my thinking shifted about 1 or 2 years into holding Bitcoin to think about, well, okay, I don't believe this system is going to last my lifetime. I don't really believe it's going to. And when you're standing at sort of the precipice of a technological revolution, and you think about, well, if something's not going to survive, what is going to be the heir apparent? What will take over? And you naturally run down very quickly. Well, are we going to go back to a gold standard? No, I can give you. I'm a huge critic of gold. I think the notion of us returning to the yellow rock for our monetary system is deeply flawed. Are we going to go to some sort of commodity-backed money that is based on something in the physical realm, like oil or some basket of goods? No, I think I could write a book on why I think that wouldn't work logistically in our, digital market credit-based system. And then I came to, well, what about a Bitcoin system? What about a system where Bitcoin serves as the base layer? You don't even need it to serve as the foundation for all sources of economic transaction. There can be layers built upon it, and credit built upon it, and credit issued on it, as in a transitional way. Why wouldn't this be the perfect system to serve as the foundational layer for all monetary systems in global commerce? And I think it is. I mean, I honestly think the biggest impediment right now is people just not understanding the potential of the asset. Having people understand really truly what it can achieve is going to be the task of our lifetime. That's why I talk about Bitcoin all the time, because I think that it requires you to have such an eye-opening moment, similar to many folks may remember with the internet, who grew up with the internet, understanding, what this isn't just online chat forums where people, share pictures of cats. This is something much bigger and deeper, and it will impact every aspect of our lives. So moving forward, like the long-winded way to answer your question, I don't think the institutional narrative, the narrative that people are going to come in and pump Bitcoin, a handful of bigger banks are going to buy a bunch of Bitcoin. I don't actually believe that is what takes us to north of $1 million a coin. I think it is a watershed moment in the macroeconomic landscape where the system starts to break down and people are forced to turn to Bitcoin, not out of preference, but out of need. And I do think that comes.
So, how does that look like in the next, say, 5 to 10 years for the digital asset space? I know there are some parts of the world that are denominating their wealth in BTC. You have El Salvador, you have Chile, you have Venezuela, you have a large portion in Africa, and even in some Eastern European countries where individuals are literally using sats to denominate their wealth, given hyperinflation. So, for yourself, right? Seeing how each market cycle has played out, how does that look like for the retail and institutional user, given everything that's going on, right? You have Grayscale that's going through a restructuring, and they've been in the game since like 2012, 2013. I believe that they were in the space around the same time that Pantera came in. So that's it's going to be sort of a blow to the industry. So I'm trying to get some feedback in how the quote unquote next cycle is going to look like for all parties. And like my speculation is that when the Fed returns to easing, right, it's going to spiral some countries into Zimbabwe mode, honestly. So how do you think that plays out in the next like 5 years or so?
Yeah, it's a great question. If anybody's interested, I recorded a podcast with Bitcoin Tina over the summer. Maybe somebody could pin it. It's called The Hardest Trade Part 2. And in it, we both outlined our case sort of for, I think, the next 10 years. And it's always dangerous to have like predictions on a broad scale. But I guess, without getting too hard on, too fixated on time and, sequencing it like this is how things happen. I think the more important notion you need to take away is two things. Number one, volatility and how volatility is going to play into Bitcoin. And number two, you have to focus extremely, extremely closely on the notion that our system will require more and more intervention. Okay. So whatever you're saying right now, like whatever your prediction is from a macroeconomic standpoint, you see that the Fed is engaged in the fastest hiking cycle in history, right? And you have to ask, why have they done that? Why were they slow to react? I predict they're going to engage in the fastest cutting cycle in history in the not so distant future, whether that's 12, 24, 36 months, anybody's guess, right? Nobody knows. But what does that all have to do with Bitcoin? Because when you're an asset holder of Bitcoin, okay, you have to be prepared for radical swings in prices. And I mean radical swings. The mental construct I use is that when I go to bed at night and put my head against the pillow, I want to know that when I wake up in the morning, if Bitcoin's at $5,000, I'm not going to be jumping off a building, right? My kid is still going to eat. My wife is going to have a house over her head. I'm not going to be homeless on the street. That being said, I want to know when I go to bed at night and put my head against the pillow, if I wake up and Bitcoin's at $500,000 because a few things changed on the macroeconomic chessboard, that I'm going to be happy that I made the choices I did. The reason why I use that construct, and I'm not saying tomorrow Bitcoin's going to be at 500,000 or it's going to be at 5,000. The reason I say that is because with such a small asset class and rapid amounts of intervention and volatility, Bitcoin can do crazy things in short amounts of time. Stocks can do crazy things in short amounts of time. Santiago Capital is talking about how, like, if there's a breakdown in the global bond market, you could see the Nasdaq and the S&P 500 go up, 5 or 6 times their current market cap, because there's going to be a flight to safety and people will trust the bigger mega cap names for liquidity. That is the right way to think. I think to focus on Bitcoin. The fact that it's so small and the fact that it is still something that you literally can have a few characters like Michael Saylor and others that can push it to 69,000. It makes me incredibly excited about its future, because I don't think you need that much to propel it to incredible heights. Now, that doesn't mean that I'm going to time it right. It doesn't mean that I'm going to be able to, say next year Bitcoin's going to be at X dollars. To me, that's a fool's errand. If you are somebody who understands what this thing is and how it's different from everything else out there, including things in the quote unquote digital asset space, how can you not have an allocation to it? It's like the old, quote that, it's going to be one of those things where, you have to have a little just in case it catches on. There will be people, major players, that will think about it like that into the future. And I'm not trying to give anybody hopium. Obviously, the price action's very depressing, and it makes me upset, where Bitcoin's at, because I think I recognize what it truly is. But I look at the system and I don't see an alternative. I do not see a way you can get the system, get the ship in the right direction without something stable as a rock, stable foundation like Bitcoin. We can go into some of the particulars why other assets cannot fill this void. But to me, I'm not trying to time it. I've never been interested in sort of trying to time these things, especially when I see something that's such a big deal as much as Bitcoin.
Thanks, Joe. I guess we can now touch on some of the advancements that you've enjoyed being in the space for a number of years now. I'll tell you, for myself, I think I got on the market December of 2017, got in around like 19, 20K, right around that top. And back then, all I knew was essentially just Coinbase, right? Because Binance was like this shady exchange that was, for the most part, denominated in Chinese, right? So it was very difficult for me. But since then, I think, at least in my standpoint, being a retail participant, I think the greatest advancement has been, honestly, how easy it is to onboard countries like America, right? Like Europe, where we have all this like one-stop shop, click of a button. If you're in TradFi, you can easily buy it on Robinhood. And I saw Fidelity now allows some clients to buy spot Bitcoin. So for yourself, what do you think the biggest advancements within the industry have been? It could be anything from mining, how easy it is for retail to be onboarded now. What's your take on that, being in the market over the last like 8 years or so?
Yeah, great. I'll give you my top three, and I could give you more, but these are just things that I really appreciate. Lightning is super cool and super easy and fun to play with. I've loved, setting up a Lightning node, and it's been a thrill. Even if different implementations of Lightning have not panned out or been developed, and I know there's a long roadmap of things that need to occur, it's super exciting and it's really fascinating just to, as a non-coder, as a non-tech person, to sort of experiment with it. I love Lightning. In addition to Lightning, just from a retail standpoint, I cannot tell you how simple and easy and integrated the Cash App experience is. I think Cash App's one of the coolest
Yeah,
apps.
but that is beautiful, man. That interface is so sleek and so clean. And as a matter of fact, Mr. Carlos here, um, I had actually downloaded Venmo a few days ago for the first time ever. And I kid you not, the first thing that I see once I sign up and do all the things that you have to do to be onboarded, the first thing I see is crypto. The first thing I see is a Bitcoin chart. And that to me is absolutely stunning, right? Especially from the time that I got in, because within the first quarter that I was initiated into the market, like half of the space got nuked, and most of retail was absolutely slaughtered given the Ponzi schemes that were revolting in the market, like BitConnect and all the other like MLM cloud mining schemes. So to me, like that experience was so clean, man. So I definitely agree with you, man. That Cash App experience
Yeah,
is so beautiful, right along with Venmo, man.
yeah, and Cash App's great too, just because it's got Lightning built into it right now, and it's so easy to transition from like a hardware wallet into your Cash App to liquidate for cash if you need it, or vice versa. If you got extra cash, you can just easily convert it into Bitcoin and get it off the Cash App. I mean, it's incredible, especially for people just getting into it. And I also like one basic thing. If you study psychology and just principles of persuasion and influence, they talk about this phenomenon where people become blinded and people become paralyzed by choice. And one of the things I always hate about the crypto exchanges is you log on there as a newbie and you see Bitcoin, and maybe Bitcoin's buried at the bottom of a list of like 50 shitcoins. And then you see all these other little shiny coins that have much more colorful logos and catchphrases, and, banana coin at 6 cents a coin. You say, why don't I just, instead of buying Bitcoin, I buy, 50,000 banana coin. And I think it confuses a lot of people. And I think even if they go in with the idea of I'm going to buy Bitcoin or get involved in Bitcoin, dip my toe in there, I think that they get distracted by the shiny objects. So I, for one, like it where Cash App just strictly limits to Bitcoin, and I think you can buy stocks on there too. That is such a cool thing for new people, and it's something where you want to go dabble in all the shit coins. Go do your thing. I don't fault people that do that. I think it's dumb for a variety of reasons, but people made a lot of money on it. Go for it. I'm all about people doing well, but I do think for newbies, I'm not going to tell them to go into the shitcoin casino, because I think they're going to be distracted. I'd rather them just focus on Bitcoin, and then if they want to play and dabble in speculative tokens, go for it. You can take that as your level 2. Go get a Coinbase account after you get a Cash App. But then the final thing, which I think is great, just from the standpoint, is multi-sigs. When I was first getting into Bitcoin, it was very difficult even for me to figure out just hardware wallets, how to take now, like it's simple to set up multi-sig solutions. And there's service providers that did not exist when I was getting into Bitcoin that let you develop a multi-sig wallet, which is awesome if you are holding a significant amount of Bitcoin. For many years, holding a significant amount of Bitcoin on a hardware wallet kept me up at night, because even if I felt confident with it, I was like, wait a second, what if this happens, or what if this happens? Now with a multi-sig solution, I sleep a lot better.
Perfect, Joe. Perfect. I see we have a couple of new listeners here. Here joined by our special guest speaker, Joe Carlisair, and he's joining us on a new episode of Crypto World Radio, presented by Because Bitcoin, where we talk all things across the digital asset space. And I have posted the Discord link up on the Nest, and we now have a community of over 1,000 members. If you want to join a vibrant community that's always having some activity throughout the day or throughout the night, feel free to join that. And I see we have Premise here from the community. I see we have Dorito. I see we have Kimchi. What's going on, guys? It's great to see you. And yeah, if you guys have any questions or anything you want to add to the conversation with Mr. Carlos here, feel free. We're right about approaching the halfway mark. So if you want to come up, feel free to press that request button, and I'll bring you right up. See, we have someone called Mario Spaghetti. Oh, man. Premise, if you want to add anything or ask Joe any questions, feel free, brother. If you wanna join in, dude. Good
Hey
to
man.
have you up here, man.
Hey man, hey Joe, and I've been listening to Joe when he comes up on some of Carter's show. I actually came up here when you said Joe's gonna be running back a little. I just wanted to have someone else up here, which and then he showed up, so I'm just listening. Honestly, you can boot me down to at any point.
Nah, dude, nah. You're a fan, bro. So Joe, being in the law space, right, when it pertains to the digital assets, what are some things that are being currently worked on? Because I know, like, if there's going to be anything that's going to be done and implemented within the market, um, by the next halving, not this upcoming halving, but the one after in 2028, what are some developments that you're seeing occur? And do they include anything such as um, like, I guess, restrictions on trading, right? So one thing that I've seen circulating around, and it's just word of mouth, is that for some exchanges, right, here in the U.S., trading will likely be denominated similar to the equity markets. So Monday through Friday, 9 a.m. To 4 p.m. Do you see something like that currently being developed? And if not, what are some other things that are currently in the process of being implemented within the space?
Yeah, it's a great question. So here's a couple things that I can tell you will happen over the next 2 to 3 years. And this is almost done deal. You're going to get a whole new host of regulations from the Treasury Department. Um, those are mostly going to be under the hood type taxation and custody regs that are going to come down, be promulgated based on what was passed in the infrastructure bill. So that is coming. You may have seen that they delayed implementation of some of the broker-dealer reporting requirements, none of which is going to influence your retail trader or investor, but you're going to get a lot of additional clarity for custodians, broker-dealers, folks that fall within the reporting requirements of the infrastructure bill that was passed last year. So that's going to be a big development for people that are, like myself, advising clients in the institutional side of the space. But the bigger question that is going to, I think, consume the digital assets, quote unquote, crypto space over the next year is what policies are taken from the standpoint with the exchanges. And we have to go back about, say, 6 months to a year to see this hard push that was advanced from SBF and affiliated groups to try to get a piece of crypto legislation through the Congress, spearheaded by people like Senator Lummis and others. You had this bipartisan effort that SBF was trying to promote to get a crypto-friendly bill passed. Well, my contacts on the Hill and folks that I trust have told me that that is all but dead now, that folks that were taking money and were involved with SBF don't want to touch crypto. They don't want even the appearance of impropriety because a lot of them took campaign contributions from this. So folks that I've talked to, again, sort of off the record and some even on the record, have said that they don't expect there to be any major crypto bill passed by Congress over the next year, other than maybe a stablecoin bill that I guess affects how stablecoins are treated. That's important. And the reason it's important is I think that if there is no action legislatively, that opens the door to more enforcement actions from the SEC and the CFTC. Why is that important? Well, if you had a bill coming that was going to quote unquote clean up the space, the regulatory agencies, the enforcement agencies like the SEC, they're not going to file some sort of very difficult case against the major exchanges. They're going to rely on Congress to speak, pass a bill, and then they're going to say, there we go, we've cleaned up the space. If there isn't a bill coming, I think their feet are going to be held to the fire to potentially, and the big word is potentially, file litigation against these major exchanges for selling unregistered securities. Now, just so you know, the exchanges are very well heeled. They have excellent teams of lawyers. They have extremely high capacity to fight off these suits, similar to Ripple Labs, and it could be 2 to 3 years of litigation between the SEC, CFTC, and some of these exchanges.
Thank you, Joe. Thank you for.
I'm sorry, I got a call. I just wanted to wrap that up. I was just going to say you could get this piece of you could get litigation filed against these exchanges, and I think that could be a game changer. Even if the litigation takes several years, you could get orders, temporary restraining orders, injunctive relief that prevents the sale of certain assets on these platforms, and that could come this coming year in 2023. I'm not saying it's going to happen. I'm saying that I think there is a better, much higher probability of that happening than people think if there is serious litigation filed against the exchanges.
All right, I see we have some questions rolling in, and I see Kimchi, one of our BB chats, joining in. But before I open that up, you brought up, of course, in normie terms, it's called, there's Armageddon coming, unlistings of many of these altcoins. So, Joe, as far as America is concerned, would their first priority be things such as Coinbase, which is a publicly registered company within the United States? Or do you think they're going to dilly-dally and go for offshore exchanges like KuCoin or Binance or OKX? How is their strategy looking like in your eyes? Because to me, I think they should focus on America and focusing on Binance and all these other entities. I think that currently for the SEC is completely useless, and they should focus within the homeland, right? Because Coinbase has been caught many, 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 many times over the last 10 years, caught for insider trading. And as a matter of fact, I think that the statistic is for every 10 employees that Coinbase hires, 70% of them, quote unquote, retire early, right? They somehow just leave, and it always matches up with like a slew of these altcoins being listed, and they all pump, like severe pump and dumps essentially. It's like some Wolf of Wall Street type of activity. So how do you think like their side is? Do you think they're more of like looking towards the road ahead for America, or are they looking like in the rear view mirror saying, oh, look at what happened to Binance, oh, look what happened to KuCoin, time to implement those rules here in America? Like I think personally they should be focused on what's going on here in America rather than some place in Singapore.
Yeah, I agree. I think they should be focused domestically, and I think their strategy overall doesn't make a lot of sense. And I respectfully disagree with many friends or colleagues that are at the SEC. I've talked with folks about this, and I have tremendous amount of respect for people that go into public work. They don't make as much as the private sector in a lot of respects. They're very hardworking. That being said, I think that sometimes they are not. They miss the forest through the trees. They basically look at the problem in sort of a myopic way, and instead of trying to develop a circumspect, comprehensive policy. And I'll just give you one example. Okay, there was an action filed by the SEC against I forget the gentleman's name. He was doing insider trading at Coinbase. Okay, in that suit, There were nearly a dozen different tokens that were named as unregistered securities in the suit. This was just filed this year, okay? And it's an insider trading act. Well, if you're going to file an action against one employee and his family for insider trading on Coinbase, why is there no suit filed against Coinbase for aiding and abetting the sale of an unregistered security? That makes no sense at all, right? Why, if you're going to take a public position in a court filing, and you're going to say this gentleman is using your platform to trade unregistered securities, the DOJ indicted the same guy for wire fraud in relation to these unregistered securities. Why is there no action against Coinbase? Why is there an action against Kim Kardashian for pumping that Ethereum Max token that was a total scam? But there's people that are far bigger pumpers of some of these tokens that have no actions against them. And the only conclusion you can come to is that the SEC and the CFTC have taken a strategy that they're going after the little fish, and if you're a big fish, they don't want to fight. They have sort of, I think, maybe in some cases bitten off more than they can chew with things like the Ripple Labs, where they are still locked in multi-year litigation, now going on the third year against Ripple Labs, with motions for summary judgment still pending. I think that they're questioning whether they have the manpower and the resources to go after the bigger exchanges, and that is I think coloring their judgment. They're saying we need some moral victories, we need some minuscule little slap on the wrists we can dole out against people like Kim Kardashian and this one guy who's probably one of dozens doing the insider trading at Coinbase. We need to have these sort of badges of victory, when in reality they're not doing a darn thing to fix the real serious criminals, fraudsters, and scammers that proliferate throughout the crypto space. So my view is that I hope they wake up. I hope they get the cojones to go after the bigger entities and stop this one-off piecemeal approach to this industry, because a lot of people are getting hurt by it. Either say you're going to do nothing and just let anything go, and at least then people know that the regulators aren't going to be there to protect them, or try to actually do something to influence the industry at something more than the margins.
I see we have Kimchi up. Kimchi, feel free to ask your question.
What's good, Wabi from SBB Gang? And much love and thanks to Joe for being here. This question's for you. So going off the notion that hard cases make bad laws, and that the present landscape is riddled with cases like Ripple, FTX, NFT rugs, DeFi rugs, hacks, just like the one regarding Mango that launched today, do you see just a continuation of the stalemate that's been going on the past few years, or is it finally hammer time for regulators now so they can make an example out of such a violently unregulated space as it relates to crypto and its adjacent assets? And so, like a follow-up would be, does there need to be like a leadership shuffle in your opinion?
The second one's easy. Absolutely. I think that Chair Gensler has been an abysmal failure. His entire tenure as the SEC chief has been a failure, in my opinion. I'm very critical of him. I don't think I think many people had high hopes for him, and I don't think he had any sort of comprehensive framework when he came in. In fact, he'll openly say, when he's interviewed, he says, well, I think we should continue down the path of former SEC chief Jay Clayton, which, by the way, was a horrible failure. So you're going to come in as the new guy, and you're going to basically adopt the policies of the old guy, which were failing policies and didn't even get a handle over the space. That makes no sense for someone who wants to be a reformer. I think that he's more focused on trying to angle for to be the Treasury Secretary after Yellen resigns or retires. So yes, we absolutely need to change leadership. That's an easy one. Going back to the other question, which is, I think it's helpful sort of to convey my thoughts properly. I'm going to give you some probabilities. I thought last year before the or this year rather, before the SBF debacle, I thought there was a better than 50% chance we were going to get some sort of omnibus crypto legislation that would fast track the registry of tokens, that would make it easier to list on some of these platforms, sort of a pro-crypto piece of legislation that would be helpful to SBF and his allies. I thought that was better than 50% chance of happening. I think after his arrest and hopefully soon his conviction, I think that is, a non-starter. I think there's probably less than 5% chance you get some sort of omnibus crypto package passed by the Congress. Like I said earlier, I think if you had a gun to my head, I think the only thing you get through in the next year or two before the presidential election is maybe a stablecoin piece of legislation that's a one-off and it's tacked on to some other big spending bill. So I don't think anything's coming from the Congress. Now, the question, which I think, as I understand it, is, do I think there's going to be something fundamental that's going to change and fix this space? From a probabilistic standpoint, I would say there is probably a 30 to 40% chance you get a major wave of civil suits filed by the SEC against the exchanges for aiding and abetting the sale of an unregistered security. Now, 30 to 40%, that's like, a little over a third. My base case remains that nothing changes the status quo until the next presidential election at the earliest. I don't think there's going to see any major, departure. I do think there's a potential out there. I think it's all going to depend on, number one, whether Gensler stays on for the remainder of his term. That's going to be an essential part of, my thinking. If he doesn't stay on for the remainder and you get somebody else new in there, I think you have a better chance of them trying to develop some new policy. But keep in mind, the SEC acts primarily these days through enforcement. What that means is that they don't issue decrees where they just explain their thinking. They reserve the right to interpret and use their discretion and say, we're going to prosecute this guy, we're going to file suit against this woman, but we're not going to file suit against him, her, and that guy over there. That's how they do it. It's unfortunate. I think lawyers in the space like myself would love to have more guidance on, okay, well, what exactly are you going to do to get to keep our clients out of trouble? But they don't like that strategy. They would much rather act through official channels like filing lawsuits against people.
Mr. Carlos there, I do have one question as well on behalf of myself. As far as like CBDCs is concerned, how do you think that's going to be implemented within the digital asset space? I know USDC's Circle is trying to form that framework pertaining to that. And, with the Fed trying to roll out their Fed Now service over the next, I would say 3 years, because I know Jerome Powell finishes his term around Q2 of 2026. And it really seems like he's really gung-ho on trying to pass that. How do you think that looks like, given that you do work within more of like the lawyer space, the law space, all that stuff within the digital asset space?
Well, this is not my opinion. You can look it up. It's in numerous documents the Fed has published recently, including their financial stability report that comes out a couple times a year. You need to go read their exact statement, which is that they will not act, they will not implement a CBDC without legislative approval. In fact, Jerome Powell testified before Congress. He does not believe that they have the authority to implement a CBDC without some sort of congressional approval. Why is that important? It's important because you have the head of the Federal Reserve, the chair, saying we're not going to do this unless Congress explicitly tells us we're going to do it. And Congress, as I think people know now, we have a new changing of the guard. You have a Republican House, and you're going to stay with a Democratic Senate and a Democratic President. So again, when you have gridlock in government like that, gridlock in the legislative branch, and there's not anything that can get passed, it's extremely unlikely, in my opinion, that before the next election, you're going to get some sort of CBDC bill passed. And if you take the Fed at their word, which I know a lot of people don't trust a thing they say, but take them at their word, they're not going to do any CBDC before they get congressional approval. So I don't believe we get anything before the 2024 election on the CBDC front. I know that they're studying it. There's some Fed governors who have openly said that the CBDC does nothing, that it's not effective. There's actually a good paper, I think, by the Fed, is it Williams, one of the governors? If you Google Fed Williams, his a paper called a CBDC, a solution in search of a problem. And what his whole premise is, and he concludes in the paper, and he's, I think he used to be a member of the FOMC or is currently, I can't remember. But his whole premise is that, this is not going to serve any overarching purpose. There's no virtue in a CBDC right now, at least as our system is currently constituted. So I think there's dissent at the Fed, even whether it makes sense to do the CBDC. Ultimately, I think they will go there for macroeconomic reasons, just because they need to. They need to speed up the rails of getting cash into people's hands in the future. But I don't think it's going to happen in the near term.
Thank you, Joe. Thank you, Joe. And what are your thoughts on some of the developments going on within the Bitcoin ecosystem? I know there's things like smart contracts trying to be developed, and also, like, what do you think of more like retail based custodian multi-sig solutions like Casa and Unchained? What are some of your thoughts on like those developments within the Bitcoin ecosystem? Because me, like, I think that just thinking about BTC as just a peer-to-peer currency, I think within the next 10 to 15 years, individuals on the retail side will be able to access the ecosystem a lot more deeper. How do you think that looks like in your opinion?
Yeah, I think that and this is just from a lot of conversations I have, I think in the next say 2 to 3 years, Bitcoin becomes far more integrated into the traditional old world finance than people can even fathom. The amount of folks I talk to that are credit unions and smaller regional banks and people just allowing Bitcoin to come online into regular accounts, it's going to be almost seamlessly integrated, I think, with the banking system. And the reason that's significant, I think, is because the idea that you're going to have these crypto banks or these crypto exchanges or these sort of fast and loose players like FTX out there, and they're going to dominate this market share, I think is fundamentally wrong. I think Bitcoin is going to be much more of a old world sort of legacy instrument that's going to be traded by most major banks. I've heard very reliable sources that talk about how JP Morgan right now, like their banking institutional clients, can buy stocks and trade options and do that right on the same platform as their Zelle app and as their checking account apps. I think you're going to see a lot of major institutions offer and credit unions and other players offer Bitcoin purchase and custody in your traditional banking accounts. So I am very bearish on most of the quote unquote crypto exchanges, crypto native companies. I think that their lunch gets eaten by the bigger TradFi markets. And you can see this already on writing on the wall when it comes to things like Fidelity Crypto that launched and other things. I think that I think the quote unquote crypto market will be subsumed and absorbed by TradFi. Let's be conservative, within 5 years.
Perfect. Thank you. Am I coming in clearly? I keep shifting in and out. Unmuted.
Yeah, you sound great.
Okay. Perfect, man. So, Joe, me myself, I live here in Miami, Florida, and we're essentially becoming like sort of like a Dubai where it's very tech oriented. And our mayor, Francis Suarez, is trying to implement Bitcoin on all fronts, right? He's trying to pass a few executive orders where, like, small businesses can pay their employees in BTC, where they can purchase goods via BTC. Essentially, what El Salvador did, Francis Suarez wants to be the first major city within the U.S. to encourage that sort of innovation. So for yourself, Mr. Carlos, what else should we be looking at as far as like other major cities in the U.S. implementing this sort of tech? Like, what have you seen, And of course, in Miami, we do have a bit of froth in the market. I know we have the Bitcoin Bull and like all the Bitcoin conferences that, as much as they, inspire innovation, they also inspire a lot of scams, honestly. So, Mr. Carlos, there, being an American, um, what are more cities that you think are in the process of implementing BTC in everyday society? And also, I do want to add that every other supermarket here in Miami, there is a kiosk where you're able to redeem dollar bills for Bitcoin. And also, the Bitcoin ATM business is going absolutely parabolic in the area. So if you want to share some of that, like on a more personal note, feel free. And I also want to encourage everyone, if you want to come up and ask questions and statements, feel free. And if you enjoy spaces such as these, feel free to follow the Because Bitcoin Twitter page and turn on bell notifications so you can get alerted when these spaces occur.
So I think there's exciting stuff happening from coast to coast, honestly. And some of it's one-off, some of it's going to fail. It's not going to work out as you'd expect it. But I think the overall trend is one in which people are getting more familiar with Bitcoin. They're going to understand in the next bull run very quickly how to buy it, how to store it, how to custody it. We had the greatest learning experience collectively as a society you could hope to have. All the old Bitcoin OGs that got burned by Mt. Gox, many of whom are my friends and I talk to for years now and advise many of his clients, they learned the lesson. You don't trust other people to hold your Bitcoin. You hold the keys yourself. If they're not your keys, they are not your coins. That was burned into the brains of a lot of the OG Bitcoiners that bought Bitcoin back in the day. And now as a society in the future, when the next bull run comes, everybody, I believe, will be preaching relentlessly, don't trust the exchange. Get your darn coins off. And that's how people learn, right? They touch the stove, they get their hand burned, they realize that that's not how you're supposed to treat this asset. It's different than a stock. It's different than these other markets that are more developed. You have to take personal responsibility. That is a key cultural learning experience, because I remember fighting back when people were using Clubhouse a lot more, fighting with people saying, well, no, you have to understand self-custody. And people would say, no, that can never happen. We can never have a major exchange down. We can never have somebody rug, $1 billion worth of users Bitcoin, like it appears that, SBF has done. Now we have the concrete proof. We have the perfect example. So I think that, for me, culturally, that's the biggest single thing takeaway, that, as awful as it is, and so many people got burned by the FTX debacle, at least now you have something specific to point to folks that, yes, this can happen again, so don't make that mistake. But all the things you're saying, Miami, other test cases across the country are they're all going to be helpful, and they're all going to be little examples in your backyard of how Bitcoin's being adopted and incorporated into the landscape. But to me, okay, as interesting and fascinating as all that is, and how development is surging across the board, I cannot take my mind off or the real story, which is what's going on in the macroeconomic landscape. I think that macroeconomics will push Bitcoin more than anything that we could possibly have on a development front over the next 5 to 10 years. And the reason for that is that there's too much debt in the world, that despite this inflationary impulse we're all dealing with, ultimately reality is going to set in. The hangover is going to come back to haunt us in the form of a severe economic downturn, which I know many people think is going to happen right now. Maybe it'll happen late next year. Whenever it happens, it is coming. We're going to have very difficult, rocky waters ahead of us. And once you realize what comes on the other side of that, which is unprecedented amounts of stimulus and easy money policies to keep the ship afloat, Bitcoin, it's kind of like one of those things where you can't get too bullish about it. You can't get too excited about it, because I think that there's no way the system's going to be able to hold together to such a degree unless you have the quote unquote money printer go burr, massive amounts of stimulus. And Bitcoin's going to be the biggest beneficiary of that, because it is a finite asset. It's not scarce. It is finite. There's only 21 million, period. That's it. And there's not even really 21 million. We know that many millions are lost. So, from my standpoint, like, I'm not interested in timing it. I'm not interested in playing around with games. I don't really care if it goes a little bit lower. I'm focused on the future, which is, I think, one in which all roads lead to Bitcoin.
I see we have Professor Tabrizi from Stanford. If you want to answer, sorry, if you want to ask any questions or
Can you
give any
guys hear
feedback,
me?
feel free, brother. Yeah, you're good, brother. You're good.
All right. Hi, Joe. Good to see you here.
Good to see you.
I'm with you in terms of being bullish about Bitcoin. For those of us who had no choice but bought for our retirement, we bought GBTC, and now dealing with a 50% discount that could potentially get worse if there's further downturn with Bitcoin. I guess the question that I have is, let's say we may not have an ETF a year, 2, or maybe even 3 years. If we get into the scenario that you mentioned, which is maybe in a year, 2 or 3, Bitcoin goes into this bull cycle, the discount should close, so you potentially have a higher upside, if you will. I mean, the alternative is you sell your GBTC and you remove your account and you buy Bitcoin, but then you lose that discount and you're kind of, basically you lose that upside if Bitcoin goes up. So two questions I have. One is, do you know, if you had to just come up with probabilities, do you know if they have the Bitcoin? I mean, I really believe they do have the Bitcoin because they get audited in the US. And the second question is, what do you think with people who are already stuck with GPTC and there's not a lot of alternatives? Again, I know this is not financial advice, but I just want to know what you would do.
Yeah, thanks. Absolutely, it's extremely painful, and I've talked with clients about this, and anybody who's holding GBTC, I feel for you. It's just wrong. I won't say it's criminal, but it is wrong how they're handling the asset. So let's go back with what is causing the deep discount. So for those that aren't familiar with this, and I'll just summarize it very quickly. When you have a trust, okay, the trust has a net asset value, okay? It's called a NAV. And what it means is that if you take the assets in the trust, the shares should theoretically trade near the NAV. Maybe they can be a premium to the NAV or a discount to the NAV, but they should approximate what the NAV is. Now, there are many trusts that trade at a discount to their NAV, and there's structural reasons for that, and that's not new. But you're getting to levels that are kind of obscene, right? The fact is, the Bitcoin in the GBTC trust is it's worth a lot more than what the shares are trading at. So why is that? Why are the shares trading at such a steep discount? And one of the major reasons was because they were extracting this premium where you could effectively sell Bitcoin to the trust, then you would get your shares, and then you could liquidate your shares after the lockup period and extract a lot of that premium. And the Grayscale Trust was buying Bitcoin for a lot longer than they should have been buying Bitcoin. That's serious, in my view, mismanagement. One of the problems with the trust structure, because it's closed, it's not like an ETF that trades and goes back and forth, is that once Bitcoin goes into the Grayscale Trust, it can only come out. You can only get the Bitcoin to come out for one reason. That is so that they could sell Bitcoin to pay their fees. They take that 2% fee annually. The rest of the time, once the Bitcoin goes into the trust, it stays there. And if the shares are tanking and no one's buying the shares, it can trade at a very steep discount like it is now. So, what happened in the industry is that there were many companies and individuals that had shares of GBTC that they were using as collateral. In fact, Alameda, FTX, all the characters, Three Arrows Capital, they all had large positions in GBTC. And because it was liquid, because it was a security trading publicly, it had sufficient liquidity where when the market was rolling over, they had to sell those shares to keep their operations afloat. So you had this massive dump across the board of GBTC shares for people that were just trying to raise liquidity. It is not, because I don't believe, at least until recently, this theory about how they don't actually have the Bitcoin. I think that's a bunch of malarkey and made up conspiracy theorists. I don't think there's any evidence of that, for the reason you were just saying. You'd have to have massive conspiracy among teams and multiple law firms and accountants to camouflage this. I just think it's just rank conspiracy. But put that aside, where do we go from here? You've got a GBTC position. It's trading at an extremely steep discount, and it's in a retirement account to make matters worse. It's not like you can just sell your Bitcoin without paying penalties and converting it to Bitcoin, to regular spot Bitcoin. So it gets really to be difficult for people. Without giving any particular financial advice, what I've talked to people about is, I actually think that at these levels, it makes sense in my mind to take some portion of your GBTC and liquidate it to try to get it to spot Bitcoin, for a variety of different reasons. One is a hedge in case continued downturn. Now, I would not sell it all. I wouldn't sell even, more than 10, 20% at the most of it. But I do think Bitcoin is so incredibly undervalued at these levels that, and even if you go lower, you get better prices, that you want to get some of that spot exposure, because the spot, in my mind, is the best you can have. And it makes no sense not to just take the hit and just try to minimize some exposure if you're over levered on GBTC. But I want to emphasize, I would not tell anybody ever to sell huge portions of your GBTC. I do think that you get another bull run. I do think the gap closes. It gets a lot closer to NAV. I don't believe the conspiracy theories. I just think that you have an environment right now where it's a risk-off atmosphere. People do not want to hold Bitcoin because of the Fed and because of the hikes and what could happen in the real economy into the next year. And you could be in for a painful 12 months, right? But as I said earlier, I don't care if it's Bitcoin or if it's stocks or whatever asset. I'm not interested in trying to time the bottom. I know that the vast majority of market participants will miss the bottom. I posted something yesterday. I don't know where the bottom's at, but I do know when we finally do put in a bottom and we start to rally, the vast majority of market participants are going to say, "Oh, it's a bear market rally." I've seen this time and time again, and nobody catches the bottom. Nobody's certain at the bottom. It's all just conjecture and people after the fact saying, "Oh, I nailed it." So I hope that answers your question. I'm sorry it's the situation you're in, but I would think that you should try to perhaps minimize some exposure, try to get more spot, but don't panic sell. It's the worst thing you could do at these levels.
Agreed, and thank you. Great advice. Thank you, Joe.
Mr. Carlos, sir, I want to thank you for your time, brother. It's been a really informative hour. Thank you for taking the time out of your day, for being a host. I mean, sorry, for allowing me to host you on the space. I'm sorry for that. We'll wrap up here. I see we have Obi coming up as a speaker. Obi, feel free to give any statements or to answer any questions for myself or Mr. Carlos, sir. Obi, you there? All right. I guess he's caught in limbo there. Payne, do you have any statements or questions that you'd like to ask Mr. Carlos there?
How's it going, Wabi? I was going to ask you, Joe, and sorry if this was already asked. This is more of a macro question, but do you think any of China reopening could alleviate some of the supply chain issues that we're seeing and possibly not have as deep of a recession as everyone is anticipating?
Yeah, absolutely. I think that right now you've got two major trends in macro that you need to focus on. Number one is when the debt gets rolled, and what I mean by that is that if you are if you're a business or even an individual or even governments, it's not so much the interest rates of the day, It's rolling the interest rates of the past, rolling the debt of the past. And what we know from work going back to the 1960s and 70s with Milton Friedman is that once you hike interest rates, it takes anywhere from 12 to 24 months before they finally enter into the system. That's really significant. Okay, that's the number one thing, that hiking rates, although the markets and equities sell off really quickly, the actual pain of those hikes, the pain of all the front-loaded hikes they've done this year, really isn't going to be felt till next year. So the question is, can the economy pick up, get fast, get strong enough so that once the pain is starting to be felt next year, we're growing at a fast enough clip to offset that, and then that will allow the Fed to sort of ease back and slow down, or at least maintain the stability of their hikes. That's a really key thing. I know that people have been calling for a recession this entire year, and right, what are we looking at? We're at the end of the year, Q3, Q4. We've got GDP growth above 3%. Okay, even by most years in the Obama years, that's robust growth. We never hit these levels during most of that time period. So that's the number one thing. Like, can we grow fast enough? Can we grow our way out of this problem with these heightened rates before things start rolling over? The second cross current that I think you've got going on here, which would be in camp soft landing, is if you can keep lending going. Okay, it's not as much the rates of lending as it is access to credit. And what you saw during the Great Financial Crisis and many other recessions is that credit creation, loan creation, actually slows down. It falls off a cliff. People start saying, I'm not going to give these people any more money because I'm really nervous about what happens next. The bank's lending activity really is, that's like choking the neck of the economy. We haven't seen that yet. I mean, everybody keeps posting the darn chart about credit card growth, and that's a bullish chart. It's not a bearish chart. The fact that people keep borrowing and borrowing and borrowing, and banks are giving them more money, tells you that the economy can avert crisis in the short run, right? Obviously, more debt in the long run is a bad thing. Nobody's disputing that. But as long as people can keep stringing along and cobbling things together in the short run, that's not a bearish thing. In the long run, debt is always bearish, right? Debt is always deflationary, and it's something that acts as a curve on the economy and economic growth. But to me, like, those are the two things. Can you grow fast enough into the new year? Can you really get a growth impulse? Number one, and number two, if you can do that and without credit being cut off. Those two things will determine if we enter into this real soft landing or an extremely hard economic downturn, which, your base case should probably be a painful recession.
Appreciate it. Thank you so much.
All right, guys, if any of the speakers want to give some closing thoughts, we'll start wrapping up now. Professor Sabrizi, if you want to give any closing thoughts, feel free. Kimchi, Premise, feel free. It's been a great time hosting you, Mr. Carlos there. So again, if you guys have any closing thoughts, feel free.
I just want to say that was a great show. Learned a lot. Thank you so much for coming up, and I appreciate you, Wabi, for hosting.
Thank you, Premise. I appreciate the kind words and love and support, bro. It truly means a lot to have you guys up here as speakers, and also for the audience. We have about 158 listeners, and if you guys enjoy this sort of content and would like to participate in more discussions such as these with individuals like Mr. Carlos Air. Sorry about that, sir. Feel free to follow the Because Bitcoin Twitter page and turn on bell notifications. And we provide a consistent stream of Spaces content Monday through Friday. We have Market Talk, of course, with our boy Carter. And then myself, typically at 7 p.m. Eastern Time. But given some time zone differences, when we do have special guests from individuals within the space, that might be a little bit earlier or a bit later. And if you guys want to catch a replay of the space, in case you came in a bit later, you've been in and out of the space, you can catch a replay of the space about 15 to 20 minutes after the space is concluded on our YouTube page. And you can find a playlist on our YouTube page. It's called Crypto World Radio, where you can see a replay of every single episode that I've done so far. So feel free to check that out. And we also have a newly rebranded show combining both our morning and afternoon shows, with, of course, our CEO Max and Premise and Snorlax. And I believe Snorlax will be back on Twitter shortly within the next week, in case you guys are wondering what occurred to his Twitter profile. So, again, I want to thank you, Mr. Carlisair, for allowing me to host you as a special guest. And I hope you've enjoyed the conversation with myself and other fellow community members from Because Bitcoin, sir. Thank you.
Yeah,
Thank you so
thank
much
you.
for your time.
Thank you, Wabi, and thank you for having me up. I'm happy to do it. And let me just tell you this. I'm really thankful. I was thinking about this last couple of days around the holidays that, we're entering into what I think is going to be an absolutely stunning year. I think it's going to be whether the Bears get their wish and we have this violent move to the downside, and everything tanks and crashes, and you see a crazy response from central policymakers, or not, or things kind of chug along, and I think maybe we get out of this thing with a soft landing. Either way, it doesn't matter. What the cool thing we have is that you've got this cool community. You've got people that can talk in real time and get perspective and insight and analysis and research this all together. And I remember going through years ago, and just be thankful for this. I remember going through the early days of Bitcoin and early days of being in markets, even before that, back to high school, where you didn't have Reddit, you didn't have social media, you had like a guy that you talked to maybe about markets and maybe CNBC. You didn't have this kind of community and resource and knowledge. So like, we should all be really thankful that we get to chat and figure this stuff out together, and hopefully, take advantage of some incredible opportunities, which I think are coming in the new year. So thanks, Bobby. I'll be back, and happy to come up anytime.
Thank you, man. Thank you. I definitely agree with you on the social aspect of things regarding this market. There's like at least 10x more eyes on the space relative to the activity that was going on in late 2018, early 2019. So I do think over the next 18 months we'll see some pretty cool things. And talking about macroeconomics, my TLDR on that is essentially Jerome Powell is hiking us as quickly as he can into a recession to then quickly cut rates to get us out of one. So I definitely agree with your thesis on that. I do think he's going to cut rates massively. I believe leading up to the pandemic, he had cut rates by like well over 100 basis points. So I do think those sort of cuts are coming once we get to 5%. Within the next like 2 quarters after the Fed funds rate is at 5%. But that's just my speculation. I'll leave the macro to guys like yourself and Dr. Jeff and other individuals like Carter. So thank you, Joe, for the kind words, and I want to thank all the speakers for coming up and all the listeners for participating. My name is King Wabi, and thank you all so much for partaking in another episode of Crypto World Radio. And be sure to tune in for tomorrow's episode with Michael and Damiano, who have 2 decades being in Wall Street, and we're going to share some insights and talk markets again. So again, if you like crypto-based content, feel free to follow Because Bitcoin and turn on bell notifications, and join our Discord. It's always a fun time there. So thank you all again, and take care. God bless you.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm gonna get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians, you would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. It can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.